Welcome to Wealth Ideology Journey. It's a mindset where strategy, hard work, and smart decisions lead you to success. Get ready, because only those who think big will win. Recessions can be scary. The stock market crashes, businesses struggle, and people panic. But here's the truth. Some of the greatest fortunes in history were made during economic downturns. Smart investors don't fear recessions. They prepare for them. If you know what to do, you can turn a market crash into an opportunity to build wealth. In this video, I'll show you how to profit from a recession with 11 smart strategies. Watch until the end, because one of these tips could change your financial future. Part 1. Understand that recessions are temporary. Recessions, though challenging, are temporary phases in the natural ebb and flow of the economy. The economy operates in cycles, with periods of growth followed by slowdowns, but no downturn lasts indefinitely. After every recession, history has shown that recovery is not only possible but inevitable. The biggest mistake many people make during a recession is letting fear drive their decisions. They panic, sell off investments at a loss, and make reactive choices based on short-term market fluctuations. This emotional response can lock in losses and prevent them from benefiting from the eventual rebound. However, if you look at the bigger picture and take a long-term perspective, recessions become less intimidating. Markets, businesses, and economies have always shown resilience, bouncing back stronger once the downturn passes. The key to navigating recessions successfully is to stay calm, avoid rash decisions, and continue focusing on your long-term goals. Part 2. Keep cash ready for opportunities. During a recession, cash truly becomes king. While the majority of people panic and scramble to protect what they have, often selling assets at discounted prices out of fear, those with liquid cash on hand are in a prime position to capitalize on opportunities. Recessions create moments of financial uncertainty, and during these times, many investors and business owners are forced to offload valuable assets at bargain prices, presenting a rare chance for those with cash reserves to buy high-quality stocks, real estate, or even entire businesses at a significant discount. The key to seizing these opportunities is preparation. Smart investors understand that economic booms and prosperous periods are not guaranteed to last forever, which is why they save and strategically manage their cash flow rather than spending recklessly. They create financial buffers and hold on to liquid assets precisely for times like these, when the market is undervalued and opportunities arise. Part 3. Invest in undervalued stocks. Stock market crashes often lead to widespread panic, causing many investors to sell off their holdings in fear of further losses. However, these market downturns can create opportunities for those with the right mindset. When the market crashes, high-quality stocks of strong companies become undervalued, often at a steep discount. Instead of fleeing the market or making impulsive decisions based on fear, successful investors see these times as a clearance sale for valuable assets. By identifying companies with strong fundamentals, such as solid balance sheets, consistent cash flow, and a proven history of weathering downturns, they can purchase stocks that are temporarily undervalued but have significant long-term potential. These stocks may not recover immediately, but with time and patience, as the market recovers, these investments can yield substantial returns. It's crucial to focus on companies that are resilient and have demonstrated the ability to adapt and thrive during tough economic conditions. Part 4. Buy dividend stocks for passive income. Dividend-paying stocks are one of the most powerful tools for building passive income, especially during economic downturns or recessions. These companies distribute a portion of their profits directly to shareholders in the form of regular cash payments, known as dividends. The beauty of dividend stocks is that they provide a steady stream of income, even when stock prices are falling. This makes them a crucial asset in your portfolio, as they offer both stability and income generation in times of market volatility. Unlike growth stocks, where the focus is primarily on price appreciation, dividend stocks allow investors to earn consistent cash flow regardless of the market's performance. By focusing on companies with a strong track record of reliable and increasing dividend payouts, you position yourself to receive a predictable income stream while also benefiting from the potential of long-term capital appreciation as the market recovers. Companies with a solid history of paying dividends are often more financially stable, with strong cash flows and a history of surviving and thriving through economic downturns. Part 5. Invest in precious metals like gold and silver. During times of economic uncertainty, such as recessions, investors often turn to safe haven assets that have historically held their value or even appreciated when markets are in crisis. Gold and silver are two of the most popular and trusted assets in this category. Unlike stocks, which can be volatile during downturns, Precious metals like gold and silver tend to maintain or increase in value when other assets are struggling. This is because they are viewed as tangible stores of value that are not directly tied to the performance of financial markets or the stability of specific companies. When inflation rises or market crashes occur, the purchasing power of fiat currencies often weakens, but gold and silver have long been seen as a hedge against inflation, preserving wealth in times of economic distress. Many wealthy investors allocate a portion of their portfolios to precious metals to protect their assets from the eroding effects of inflation and to safeguard against market volatility. Gold in particular has been used for centuries as a reliable store of value, and during periods of financial crisis, it often acts as a protective shield, providing stability and security for investors. Part 6. Look for real estate deals. When the economy crashes, housing prices often drop. This creates a huge opportunity for investors. If you have cash or financing, you can buy properties at a discount. Once the economy recovers, those properties can increase in value and generate rental income. Real estate has created more millionaires than any other investment. Don't ignore this opportunity. Part 7. Avoid high debt and risky investments in a recession. Debt can crush your finances. If you're carrying high interest debt, focus on paying it off as soon as possible. Also, avoid risky investments like speculative stocks, crypto, or businesses that struggle during downturns. Smart investors protect their money before making risky moves. Part 8. Invest in essential industries. Not all businesses suffer during a recession. Some industries continue to thrive no matter what. Look for investment opportunities in healthcare, utilities, consumer staples, and discount retailers. These industries provide essential products and services, making them more stable during economic downturns. Part 9. Start a recession-proof business or side hustle. A recession can be the perfect time to start a business. While big companies struggle, small businesses that solve real problems can thrive. Consider starting a side hustle in industries like freelancing, e-commerce, or digital marketing. People still spend money during a recession, but they look for value and necessity. Part 10. Learn and adapt. Invest in yourself. The best investment during a recession: yourself. Recessions force people to adapt, and those who learn new skills position themselves for success. Take courses, read books, and develop skills in high-demand fields. When the economy recovers, you'll be ahead of the competition. Part 11. Stay patient and think long-term. Building wealth during a recession takes time. Most people want quick gains, but the real money is made by those who think long-term. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." If you invest wisely and stay consistent, you'll come out of the recession stronger than ever. Recessions create fear and uncertainty, but they also bring incredible opportunities. If you follow these 11 strategies, you'll be in a position to profit while others panic. Remember, fortunes are made during downturns. Don't be the person who looks back and regrets not taking action. Start preparing today. And if you found this guide helpful, don't forget to subscribe to my channel for more financial tips and investing strategies. See you in the next video.